Welcome back. And, at the top of this hour, let's try and dissect what's happening in the NBFC space, especially with regard to microfinance, those new norms coming through. Let's bring on board Mr. Kamlesh Gandhi, the Chairman Managing Director of Mass Financial Services, joining us this morning live to try and dissect that. Mr. Gandhi, I know you don't have a direct exposure. Clarify that for us within that MFI basket. But the indirect exposure that you do have gives you a good lens or good perspective as to what's playing out from a regulatory standpoint. How large is this? Because there are mixed views coming in. Some of the smaller MFIs may well benefit disproportionately, but some of the larger lenders may not. Give us a perspective of how you think of this.
So good morning, Harsh.
Very good.
As you rightly pointed out, we don't have any direct exposure, and our indirect exposure, as I have shared earlier also, that we have been reducing it since last 2 years. So as I talk to you, it will be less than 3% of our AUM. So we have been working with MFIs very selectively. And on your question about how it will benefit the small players, it should definitely benefit the small players because with the bank guarantee, the banks will get with the government guarantee, the banks will get more confidence to lend. And secondly, the confidence will also stem out of the fact that the new portfolio created by MFIs is behaving pretty well. And I suppose they have learned their lessons, and now the quality should also behave. So with this combination of a better quality and a guarantee coming from the government, I think banks should get the confidence to lend to them and kick off a benign cycle of they getting liquidity whenever it is required.
But that means, Mr. Gandhi, they'll compete against you, which means it becomes harder for you to grow. Is that how one should think of your business in particular?
No, we in our MSME business, we serve 2 to 3 notches above what MFI serve. So it is not about competing with us in any sense.
Right. So you're saying, Mr. Gandhi, that there will be no impact whatsoever on your AUM growth? Can we take that on record?
Yeah. Because of this guarantee schemes coming for MFIs, there will be no impact on our AUM growth. This will not trigger any impact on our AUM growth.
Okay. Also wanted to understand how much of your book is exposed to microfinance linked lending as of date?
As I shared earlier, it is less than 3% of our AUM. So currently, this year will be close to 14,500 crores on AUM. So the 3% is close to around 400 crores to very select NBFC MFIs.
But if at all, Mr. Gandhi, competition were to increase because of easier funding now for MFIs, could underwriting standards come under pressure, you think?
I don't think the underwriting standards should come under pressure with the lessons learned so recently. So I think at least they will live with those lessons for a year or two, and it will be very unfortunate if they don't. And on the competitive landscape, if you see that there was a shrinkage in the balance sheet size of all the MFIs. So I think there is sufficient demand for all of them to coexist. But at the same time, as I told you, that it is incumbent on all these NBFC MFIs to understand that only liquidity does not constitute a good business model. If you are getting liquidity, it is your responsibility to extend credit where it is due, create a portfolio which is within the risk adjusted returns parameters, which should give the confidence to the lenders. Then only they will get the lending continuously, because these guarantees are not going to come often. They have to stand on their own legs by demonstrating that they have the capabilities to generate quality assets.
Mr. Gandhi, if I were to kind of take a step back, try and understand the regulation itself. So it'll mean that 0.5% is payable as a fee if you want the cover of CGFMU going forward, and you'll have to lend at a lower rate as well. From your business standpoint, I know you have a very, very small book in this space, but does it discourage you from lending onward to MFIs therefore? And from an MFI standpoint, do you believe that the larger ones will likely avoid getting into this because there's a 300 crore cap as well? You're not able to cover yourself for over 300 crore.
So to start with, the NBFC MFIs whom we are working with, where their disbursements and their liquidity was not contingent to this guarantee. So I don't see that they are going to have any problem, or we are going to have any problems lending to them. And secondly, in terms of the details of the scheme, I'm yet to get into the details of how exactly the amount is and what the premium has to be paid, because it has been very recently launched. So I'm yet to get the details. But I would like to reiterate that the NBFCs whom we are working were working nicely, and they were getting liquidity irrespective of these guarantees.
And Mr. Gandhi, give us a perspective on where within the cycle are we? Have we completely bottomed? Are we at the very trough? And from here, do we pick up in terms of both asset quality as well as, because excuse me, stage 1, stage 2 trends seem to suggest that. I'm trying to understand whether we'll slip again given the global uncertainty that's playing out, or do you see a sustained recovery, because you have your ear to the ground even though it's not a very large part of your book?
I think if I understood your question correctly, in the MSME sector whom we are funding, that had started to perform well. As I have shared earlier, that our gauge of how the market is improving is our login to disbursement ratios. That had improved substantially over last quarter or so. And now again, with the global uncertainty, we are more circumspect. We are gathering all the data from the ground. It has been 2-3 weeks since this has been started, and every week we thought that it will be over this weekend, or it will be over the next weekend. And now we are at a stage where nobody knows that when it will end. So we are trying to be very close to our borrowers, understand what will be the impact. We are collecting the data, and accordingly we will tighten the credit screens. We'll be very circumspect, and we are committed to see to that we extend credit where it is due. Maybe a growth may be a percentage or two here or there, but we would like to tighten our credit screens if we get the data from the ground which warrants that.
Right. Okay. Great to have you today on the show, Kamlesh. Thank you so much for your time.
Thank you.
Okay.